Yeah, I'm losing my edge.
How to trade interest rate futures. This will be helpful with our new product, S10Y futures, fully launched. It'd be nice to know what the hell to do with them, right? That's probably step one. It's a nice thing to come out with a new innovative product. You know, like the first guy, I don't know why my mind just thought of this. I swear, I'm not like a smelly person, but the first guy who was like, oh yeah, deodorant. That's a product that we should come out with. It'll help humans to not smell so bad. After you come out with the product, you have to tell people, oh yeah, you put it underneath your arm, and it helps you. You don't have to shower for the next 12 to 24 hours. It's very helpful. And so we come out with this innovative product here, 2020's version of deodorant with Small Treasury Yield futures.
That's our advertising tagline, guys.
Startup, yeah, that's the new campaign. Yeah. Forget the small, simple, and standard futures. The deodorant of interest rates.
Yeah.
But yeah, you have to teach people what to do with it. It's not enough to say, okay, interest rate futures were invented back in the 70s. One of the first futures markets
financial
here,
futures, right?
In the U.S., one of the first futures markets, and they took off. They're huge, a bunch of volume. But guess what? Mostly by large institutions, because you look at this thing, and me, not a large institution, just a regular old dude who's got student debt, who's got a credit card, and who's got all these different things that work in interest rates, and all those interest rates are, guess what, in percentage. I look at this product and I say, well, this doesn't look like a percentage. These are this is a price product here in these interest rate futures of old. So what we did is we launched S10Y, the newest interest rate product. It prices directly to that yield or percentage. So if you're looking at a 10-year benchmark of 1% or 0.95%, our product is going to look exactly like that. You look down here at the pricing convention, the 10-year yield right now is about 95 basis points. Our product is quoted at that same time at around $9.50, 9.5. It looks exactly the same. And then you go over to those products that were created in the 70s and 80s. The 10-year is 137 apostrophe 10, which that 10 right there is 10/30 seconds. I don't know what that means in yield. And if I want to get that yield, Pete, I need to think about DV01. I need to think about these fractions, coupon payments, and par value, and all those different things. We got rid of all of it. Just yield, Pete. Just yield, and it's a product that moves about $40 a day here, or 40 ticks, or 4 basis points. It's all of these things are so cohesive, makes it super easy for everyone to understand, and it's a light trade. It's really small and easy for you to try out as well. Muted there, my boy. Muted, my boy.
Sorry, my puppy was having a freak out at the Amazon guy. So you, Frank, you hit just spot on. Is that you know what? What do I want to trade? Do I want to trade all these variables? No, I want to trade yield. I know yield, as you say. I know what yield is. I mean, I look every couple of days to see where mortgage rates are and things like that. And it's not quoted. Nobody shows you, here's your 30-year mortgage, and it's 183 3/4 of fraction. It is, I want to trade yield. That's the world I live in. And it simplifies the process. And in the world of smalls, keeping it, and this was part of the challenge of building something that translated visually to what you hear about every single day. And still keeping it within the conventions of the simplicity of a dollar tick, so you know exactly what's going on. And you're right. This is a product that will move, I believe, I want to say that it's, what do we go back 6 months? About 35 ticks is the average move. So about $35 per contract. So pretty easy and straightforward. There you have it, 40 ticks.
Well, it's so easy that Pete actually decided to just complicate it, which is really great, because I just rounded it to 40 ticks or $40, and Pete decided to, it's got to be 35. But no matter what you're talking about here, it's still a product that we pride ourselves here at the Small Exchange, products that move, around or less than $100 per day. Right. So that way you can try out new asset classes or the capital efficiency of futures without breaking the bank with these interest rate. I mean, the ZB future today, Pete, up about a full point. That's $1,000 move if you wanted to try out ZB futures. But okay, that's all the spiel on the product. We'll talk about that a ton. It's ticking convention and specifications and everything. I want to talk about, how you trade this thing, why you might trade this thing. 10-year rates, Pete, hit an all-time low in August. When I say all-time, I mean all-time.
Right.
I went to the treasury.gov, took as much data as they would give me. And right here, I think it's on August 4th, sometime in August here, that is the lowest that 10-year rates ever were. And we're still, we're about 50 basis points off of that, relatively normal. But the question still is posed. And I think that this is the simplest, like the highest level question when it comes to how do I trade interest rates? Where does my opinion come from? Well, do you think interest rates are going higher or lower? Do you think rates are going, respectively, higher to normalization or lower to negative interest rate values like we've seen in Japan or the Eurozone? A very simple trade when you're starting out at that highest level of how to trade interest rates, right?
Yeah, absolutely. And that's what you want. I think, this puts in context when you mention the historical low of rates. Now, is this absolute? We see just going back 2 years that this was at 300 basis points or 3%. Are there other countries that have a negative 10-year? Absolutely. Can this product trade on the other side of zero if U.S. rates were to? Absolutely. This product is built and engineered to trade on either side of that zero bound if need be. So there was a lot of engineering that went into making this product simple and easy to adopt. But I think, if you want to trade normalization, there's certainly a lot of quote unquote normalization to be done. If you want to strap on, as I like to call it, right up until I'm wrong, the tinfoil hat and say we're blasted through zero. Yeah, there's a simple way to do that. And you're going to hear about that way and be able to reference it every day. I always get to ask the question for products like ZB. If the 30-year or 20-year bond goes to zero, what is that price of ZB? And you know what, guys? It changes every single day because of a lot of different variables. Well, I don't want to worry about those variables. I just want to trade deal.
Don't even get me started on convexity. I'll start talking to you about convexity and how the bond
we're not
prices.
Torture anyone.
But it's super simple. And this is like truly, you and I have done that. I've had to crunch the numbers to be like, if the 2-year, 5-year, 10-year, or 30-year go to zero, these are the prices for those futures. That's gone. If this thing goes to zero, guess what? It's zero. That's it. And I love that you bring up the point about negative values. The reason why this product didn't come out until this month is because we had to figure out how to build it for negative values. And so it's truly a beautiful product here. I think will be the benchmark for trading interest rates or even just quoting interest rates. Someone asked, I already got questions on Twitter and email today. The guy was like, I look at TNX to follow the 10-year yield. TNX is just an index. And he was like, if I think the yield that TNX is going higher, what do I do with this product? And I was like, I'm sorry to make you, to underwhelm you here, but you buy it. It's the same. If you think it's going up, you buy, because with bonds and everything else, the TLT or ZB or ZN or anything, everyone is so used to, if I think yields are going up, then I have to sell it. What am I supposed to do again? It's so simple. It's an easy trade here in interest rates. I want to go one step further, and we're going to talk about this a ton, is more than stocks or any other asset class, Pete, rates tend to mean revert. Now, we've got an average value in the last 3 years of 2% in the 10-year rate, or $20 in terms of S10Y futures, or 200 basis points, however you want to quote it. And you can see here for 2018 and the beginning of 2019, you've got the ascension over that $20 level or 2% to just north of 3% or $30, comes all the way back down to that mean and now trades below it. Now, there's no guarantee that we get back to $20 next year or ever, but this is a great, much better than equities, a good mean reverting trade here. And you see the flip side, that ZN trading under it and now over it. Mean reversion, something we're going to talk about a lot. And just to conclude here, running out of time, these divergences from the mean are thousands of dollars in ZN and ZB. That's a $9,000 move. Here in S10Y, $900 move to below that mean and back to that mean would be a few $100s as well. So that's a couple of different ways to trade interest rates with this newest product, S10Y. You can see here, smaller, even at the extremes here, simpler to digest. It's in that percentage yield and every tick is $1. We hope you like the product and trading interest rates.